Bitcoin spreads from the racetracks of Australia to the cornfields and football fields in Indiana. As a spot Bitcoin ETF launches in Australia, and an NFL kicker says that they'll take their entire signing bonus in Bitcoin. As Michael Saylor says, the current investing landscape has forced everybody to become a gambler. Why can't we just save in currencies? We look at all the different places that this NFL kicker could invest their signing bonus and talk about why Bitcoin is still the superior asset. Welcome to Bitcoin Daily. I'm Dante Cook, head of Swan Business. First things first, who doesn't love a good driving and racing ad? Check out this new ad that dropped from Monochrome announcing that they will be launching a spot Bitcoin ETF today in Australia.
Bitcoin is like racing. It's not for everyone. Some people are in it for the thrills, some want to leave a legacy, some do it as an investment for their future. When you're ready to take your investments to the next level, you might want to consider Monochrome.
Although some people are saying it's the first spot Bitcoin ETF launched in Australia, that's actually not true. The first spot Bitcoin ETF launched in 2022, according to ETF analyst James Seifert. So, not as exciting as everyone thought, but still pretty cool. You know what's also cool? An NFL kicker came out in my hometown, Indianapolis, and said that they will be taking their entire signing bonus in Bitcoin.
We saw OBJ, Saquon take a percentage of their salary or signing bonus in Bitcoin. How are you looking at Bitcoin as a newly signed NFL kicker?
Well, I can tell you this right now. I'm taking my entire signing bonus in Bitcoin.
You got to love this guy. I mean, he says that Von Mises is one of his heroes. Some people might ask why Spencer Schrader would put his signing bonus into Bitcoin. But my question is, where else would he invest his money right now? We go through all of the different ways and places that he could invest his money. But first, Forbes dropped their 2024 highest paid athletes list. And the numbers on here will shock you. Couple things to note. Their top athletes raked in $3.88 billion before taxes in the past 12 months. That's 13% more than the $3.44 billion from last year. 76% of their earnings came from on-the-field earnings or contracts from their teams. 24% came from endorsements, sponsorships, and deals from off-the-field activities. The NBA has the most athletes on the list at 19. The NFL has 11. Soccer has 8 athletes on the list. I'm sorry, I'm not going to call it football, at least not on my show. There were no women athletes on the list. Here's a couple of the players and athletes that stand out. Cristiano Ronaldo, making that Saudi money now, had $260 million in earnings last year. You can't forget my guy John Rahm, who also was doing a lot of living last year and made $216 million. LeBron made 128. Giannis made 111. Steph made just over $100 million. One of the cool projects that I've been working on, I'm a nerd data geek in my spare time. When I was watching the NBA playoffs, I said, I wonder what the salaries of 2023 NBA players would be if they had invested in Bitcoin. Well, if you really want to know, you can go check out thebitcoinathlete.com. It's a little website I made where I wanted to track the earnings of current NBA players and how much they would have if they had invested in Bitcoin. One of my favorite athletes of all time, Steph Curry, if he would have invested 100% of his earnings into Bitcoin, he would be worth $61.2 billion. And that's just his on the court earnings, not to mention any endorsements or other things. Go check out the website, check out the link, send me an email, daily@swanbitcoin.com if you see any bugs or find any issues. But I'm definitely going to be adding more sports, more athletes, and more categories to the list. So please, in the comments or at daily@swanbitcoin.com, send me an email and let me know what other things you want me to add to this. Because I'm an athlete and I'm a Bitcoiner. So I'd love to blend the two worlds when I can. But back to the question, should Spencer Schrader invest his signing bonus into Bitcoin? And where else could he invest his money? Well, let's take a look at a few other places. Never mind the fact that Bitcoin has been the top performing asset class in the world 10 out of the last 13 years. Maybe he should invest in bonds. Well, we ran some of the numbers. If you look at a bond portfolio on the NakamotoPortfolio.com, our free open source Bitcoin statistical analysis tool where you can look at the impact that Bitcoin would have on different portfolios, You can see from this basket of bonds, the 10-year returns of this bond portfolio was 3.8%. If he would invest into bonds, and specifically right now, which are getting murdered, he would not make enough to outpace inflation. Maybe he should invest into real estate with 30-year fixed rate mortgages at over 7% and housing prices being the highest that they've ever been. Maybe it's a good time and place for him to invest his money in real estate. Or maybe he should put his assets in one of those banks that secure that real estate, one of those banks that has $517 billion in unrealized losses in mortgage-backed securities that the FDIC says are on the brink of insolvency. What about investing in the stock market, which has one of the highest price-to-earnings ratios that it's ever had? Going back to 1875, this is the highest stock concentration of all time. The top 10 stocks represent 34% of the S&P 500. Maybe he shouldn't invest in indexes or the broad stock market. Maybe he should pick individual stocks, like the Roaring Kitty, who, oh, by the way, is being considered to be banned by E-Trade for tweeting and absolutely dominating the stock market right now with a $180 million position in GME. Maybe he should invest in some local businesses, as GDP is the lowest that it's been this year. Oh, and the economy's not looking so hot with job openings falling over 300,000 and one of the biggest drops since 2000. That's okay. The American consumer is confident. Wrong. According to a recent study, 65% of middle-class Americans admit to struggling financially. 33% say that they face extreme stress about the debt that they have. And the majority of these people don't believe that their financial condition will improve for the rest of their lives. Maybe he should invest in foreign markets like India, where the Nifty 50, or their equivalent of the Dow Jones, fell over 6% today. Or maybe he should invest in another foreign market, like Mexico, whose Mexican stock exchange ETF ticker fell by over 11%, and the Mexican peso fell 4.5% against the US dollar, the largest one-day drop in years. The problem is, there's not a lot of great places to realistically invest your money right now, which is why more and more people are turning to Bitcoin. Michael Saylor brilliantly explains this dilemma of how the current financial markets are turning everyday Americans into gamblers.
Normally, in most modern societies, the money doesn't break down as a medium of exchange. It breaks down as a store of value. So that means that, yeah, you can store money for 12 to 36 months or maybe up to 10 years in the dollar. You can't store it for a lifetime. So if you have some money, you can't just store the money. If you want to keep your economic energy, you have to gamble it or invest it. You have to speculate with it, or you worked your entire life, you have a certain amount of retirement, and now if you store it in the bank, it'll be worth nothing. So you have to go and invest it in the stock market. But if you pick wrong, you lose it. So we basically force people to be gamblers, speculators, or hedge fund managers if the money's broken. And the money is broken. So what is the significance of Bitcoin? Well, let me say it a different way. You just take your money, take everything you earn, you buy Bitcoin, and you wait, and it goes up 20 to 40% a year forever. Or you take your money and you invest it in a bank account and you get 3% after tax, and everything goes up 10 to 15% a year in price, and you just get poorer and poorer. Or what are you going to do? Buy GameStop at the right time? Are you buy a building, run an Airbnb? I force you to go, and forcing you to be a hedge fund manager is horrifically inefficient for the society. It's just as inefficient as saying, okay, be your own dentist and doctor, right? If the medical system was broken, you have to be your own doctor. It's not good for society. What happens? People die 20 years early is what happens. So when you have to be your own banker or be your own hedge fund manager, what happens is you just get poor, or you lose faith in the future. If I told you your money was going to be worthless in 36 months, what would you do with it? You would spend it. What if I told you your money's going to be worthless next Monday? You would go out this weekend, make it decadence weekend and you would just blow it all. You would buy anything. Things you don't need. It's like, if it's for sale, I'm just buying it. So Bitcoin actually solves the problem by saying, well, what if you just had a money that the government couldn't debase, the bank couldn't steal, that would last forever? Okay, it profoundly changes incentives, because now a corporation, instead of buying back its stock or instead of dividending out its cash flows, would just keep the money. And the money would go up in value 20, 30% a year. So that's what MicroStrategy did. Like, what's our secret, right? We're just holding the money and it's an appreciating asset.
People feel like they only have three options. One, put all of their excess money and savings into cash right now and have that get absolutely wrecked by inflating asset prices and inflation itself. Option number two, maybe they put all of their money in their excess cash and reserves into insolvent banks, or banks that only secure their money up to $250,000. And again, at 5%, most people that are paying for real world expenses know that they are still losing to inflation. Maybe they go option number three and they go full roaring kitty in Reddit forums and they take all of their money in YOLO on GME stocks, or they invested in DraftKings in a Kevin Hart commercial that they see at halftime at a basketball game. Because we're all gamblers. Maybe they get lucky and maybe they hit it big. Here's a couple of other options that thousands of our customers are doing at Swan. They take a little bit of their excess money and they save it and they store it into Bitcoin. And there are even some people, like our business customers, who will take their investable cash, which is earning 5.5% in a high interest yield savings account, and they're taking 50% of that and getting into an asset class like Bitcoin risk-free, which is allowing them to own an asset that can't be debased and that is outpacing inflation to the tune of something that's up over 70% this year to date. And right now, as we're recording this show, it's back over 70K per coin. Some people are just getting off of zero and taking 1, 2, 3% of their portfolio and allocating it into Bitcoin through dollar cost averaging. Some people do it monthly, some people do it quarterly, and a lot of people are choosing to do it in Bitcoin only platforms like swan.com, where we actually help you with a dedicated team or dedicated advisors to get you onto your journey into Bitcoin. Oh, and by the way, the next $10,000 of your Bitcoin purchases have no fees on them. And as always, we have free withdrawals every single day for hundreds of thousands and millions of dollars worth of Bitcoin volume. If you want to get started on your Bitcoin journey, please send me an email to daily@swanbitcoin.com or reach out to someone else on the team. If you're an NFL kicker or if you're someone like an everyday average American that's looking to outpace inflation, that's looking to not have their retirement debased by money printing, that's excessive, well, you might consider something like Bitcoin. And with that, we're signing off for today. This is Dante Cook with Swan.com. Happy stacking.